The Federal Reserve cutting interest rates for the first time since 2020 yesterday by 50 basis points on the high end of expectations. Chairman Jay Powell leaving an open path for a soft landing, forecasting another half of a point cut later this year. But the Fed's aggressive action is renewing investor fears of a possible recession. Fox Business's Kelly O'Grady now with the breakdown. Kelly, good morning to you.
Good morning to you, Maria. And that's right. It's interesting because yesterday's rate decision indicates the Federal Reserve feels confident about its 2% inflation target, but it wants to ensure the labor market doesn't continue to cool. 50 basis points, though, is a big deal. So many investors rejoiced at that aggressive beginning to the rate cut cycle. But I have to give you some context because in recent years, we've only seen a half-point cut in dire times. Think 9/11, think COVID. So some analysts are raising concerns a larger cut could indicate we are in more economic trouble than advertised. Now, Fed Chairman Jerome Powell maintained he doesn't see signs of a recession or slowdown and indicated we could expect a couple more cuts before the end of the year. But Powell also emphasized the Fed will take it meeting by meeting.
We are not on any preset course. If the economy remains solid and inflation persists, we can dial back policy restraint more slowly. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we are prepared to respond.
Now, it's always fun to watch the market during that presser because it has investors reading the tea leaves. But I will tell you the market seemed rather confused as it digested that news yesterday. The Dow initially spiked over 300 points, but ultimately finished down 103. Futures, though, currently showing quite a rally with the Dow. Now, President Biden, though, saw this cut as a clear victory. He said this on X, quote, "We just reached an important moment. Inflation and interest rates are falling while the economy remains strong. The critics said it couldn't happen, but our policies are lowering costs and creating jobs." Some economists are cautioning, though, if you cut rates too quickly, inflation could rise back up to levels we saw earlier under the Biden-Harris administration. So, Maria, this will continue to be a very delicate balance between inflation and the labor market, all within an election in less than 2 months.
All right, Kelly, thanks very much. Kelly O'Grady joining me now is Amerivet Securities head of U.S. rates, Gregory Farinello, with us in studio. Greg, great to see you.
Good morning,
Your reaction
Maria.
to the cut.
Mark and I were talking about this in the green room. I would have preferred 25 personally.
Yeah.
I would say for our clients, over the last couple of weeks, we definitely have skewed them toward the potential for 50, just with some of the signaling that we've seen. We had the timing right in terms of September, and we had the reasoning right. But it's tough, right? The messaging here is really, really tough because investors in general, when they see the Fed lowering interest rates, they're worried that the economy is not doing well.
Well, and then,
right.
Look, Kelly just went through all of these other times that we saw a 50 basis point move, 9/11, crisis times. So does that indicate that things are worse than you expected or many expected?
The macro picture to me is definitely weak.
Yeah.
I mean, there's no question about it. We're concerned about China. Europe is weak. To the Fed's credit, they have laid back here. They've let other central banks come down. But like I said, I mean, I would have preferred 25 because I think, given what we're seeing coming out of the fiscal equation right now, given the fact that we have a very consequential election in a couple of months, there's still a lot of spending that, we're running deficits in the range of, 1 3/4 to $2 trillion, with the economy still doing presumably well.
Yeah,
I'm still worried about inflation, bigger picture, although, the rate of change has come down.
How do you promise that you're going to fix an inflation story when Mark Tepper, you can't even acknowledge what's caused it? And that is this trillions and trillions in spending, and she wants to spend more.
It's price gauging, as she calls it, right? Price gauging. But when you look at the 50 basis point cut, which I'm in the same camp as Greg, I would have preferred 25, more moderate, more gradual pace. Look at the market's reaction yesterday.
Yeah.
Investors have been sitting there saying, give me 50, give me 50, give me 50.
Yeah.
And they get 50 and they're like, oh, wait a second.
What does
that mean, right? Because the market popped and then dropped and popped and dropped. Investors were struggling to figure out what's what. And when you look at, a 50 basis point cut, one of these two things cannot be true when it comes to what we heard from Powell yesterday. Either the economy is good or we are apolitical.
Yeah.
Which one is false, Greg?
Yeah, it's a great point. And there are lots of calls this morning saying, oh, that was way too political. I thought it was really interesting, Scotty, I want you to talk about this, what Jay Powell said about the wide open border. and its impact on jobs today? Because it's not just an impact in terms of, crime, and we've obviously seen murder at the hands of illegal migrants in this country, but there's also an impact economically. Watch.
If you're having millions of people come into the labor force and you're creating 100,000 jobs, you're going to see unemployment go up. We understand there's been quite an influx across the borders, and that has actually been one of the things that's allowed unemployment rate to rise. And the other thing is just the slower hiring rate, which is something we also watch carefully.
Wow. There, he said it, Scott.
Which is almost the lead block through the line of scrimmage that allows the Fed to kind of jimmy the numbers a little bit, right? Because they can say, well, the unemployment rate, even though we're a little bit concerned about it, we're not as concerned about it because of all the influx of immigrants. But then again, we're cutting rates because we think the unemployment rate's going to go up if we don't. I mean, it's an unbelievable job that the Fed has kind of cut for themselves, where they can make it. You mentioned it, they can say, Mark, they were apolitical, and then say, well, we have to be maybe a little bit more paying attention to the politics of the border because it's affecting the economy.
Right.
I mean, it's an amazing situation that the Fed kind of got themselves into with the rate hikes, and now they're cutting rates like this before the election. I mean, the last meeting before the election, they pop a 50 in there?
Yeah.
Come on, guys.
So you think this is political?
Big time. And I think the scary part is the reason the market, I know we're up so far this morning, which is great news. The market, as Mark and I talked about last night when we were out hanging out, was now the market wants the next 50.
Yeah,
When's the next 50 coming? In November after the election?
Wow.
So that's one thing that I think the market's going to get really jittery about if they don't see it.
I got to get more analysis on this. That was a really great point. Greg, it's good to see you. Thanks for joining the conversation this morning. Greg Farinello, Lee, Mark, Scott, you with us all morning, and we are grateful. Quick break.